Hello friends, welcome back to the next session on Service Operations Management. Now let's begin with our learning. In this particular session, we'll be understanding and dealing with the concept of warranties and guarantees, its various types and examples. The learning objectives. At the end of this particular session, the learners will be able to understand how do we define or what do we mean by a warranty and what do we mean by a guarantee. We'll also be understanding what are the various activities that have been undertaken in the meaning of warranty and guarantee. And lastly, how and why guarantees and warranties are important in a service contract. And we'll also take various examples and types of guarantees and warranties. Now let's begin with our learning. Initially, first we'll understand what do we mean by a warranty. So to summarize or to do just a recap, warranty under section 12(2) of the Sale of Goods Act of 1930 is been defined as a warranty is a stipulation collateral to the main purpose of contract, the breach of which would give rise to the claim the damages but not reject the goods and cannot be treated as repudiated. So in this case, a guarantee is always stipulation. Stipulation means a condition. But this particular condition is always collateral, that is, which is not primary but which is secondary. So a condition which is secondary to the main purpose of contract and the breach of which, breach in the sense if the contract is not been performed or if a certain transaction or certain activity is not been undertaken as per the terms of agreement. So the breach of which would give rise to claim damages. So here in this case, if a certain breach is been observed, that is a particular condition is not been fulfilled or a particular agreement is not been undertaken as per the terms and conditions, then here in this case, you can claim only damages and hence entire product or entire service cannot be exchanged or it cannot be repudiated. So in this particular case, the person does not have the right to reject the goods, but only a certain portion of those particular goods can be rejected or the particular portion of goods can be replaced. And hence, such type of agreement is called a warranty agreement. In a consideration, always the guarantee or warranty contract is having a secondary importance because it is always a collateral to the main purpose of contract. So stipulation is to a condition and collateral is to the primary or secondary importance. And hence, when we have a condition of collateral into existence in terms of warranty contract, so as per the Sale of Goods Act, the warranty contract itself is having a secondary importance and hence it cannot be repudiated, that is the contract cannot stand cancelled. Here in this particular case, a person who has purchased a certain product or availed a certain amount of services, he can only claim damages and hence no further amount can be claimed by an individual. So the product cannot be refused or the product cannot be rejected and only damages can be claimed by the purchaser or the buyer. And here the intention is at most important. So stipulation collateral to the main purpose of contract. So here in this case, the main purpose of contract is needed to be identified. That is for what purpose the contract has been undertaken. So if by certain changes or small changes in a particular contract, the contract cannot be performed, in that particular case, the purpose is either secondary and it is not the primary. Now let's take an example. That is, Mr. A purchases a refrigerator for Mr. B. And here the retailer who says that it is a frost-free refrigerator. But in this case, after the purchase and sale of a certain transaction, the customer uses that particular product for around 6 months. And after 6 months, it has been observed that the refrigerator is not frost-free. And accordingly, there is a certain part of a manufacturing defect. So in this case, what happened? Only the upper portion, that is the refrigeration or the cooling position is being changed. And accordingly, entire refrigerator is not been replaced. So here in this case, if the cooling is being provided by the refrigerator, but only the freezing portion is not the frost-free concern, then here in this case, only that particular portion or the small portion gets replaced and not the entire product. So here in this case, we have to understand what is the actual purpose of the particular contract, that is stipulation which is collateral, that is which is not a mandate, which is of a secondary importance. And here in this case, we have observed that in a particular example, there is a manufacturing defect as to the certain portion or a certain product or a certain part, and only that particular part of a certain product gets replaced or repaired. So intention is utmost important, that is condition or stipulation which is main purpose to the contract. So if there is a collateral into existence and here if the intention of a certain person is not been observed or it is not been fulfilled, then we can say that there is a infringement of right of a certain condition but not of the warranty. But in case of this particular example, there is infringement of a certain collateral which is a secondary importance, and for those particular consideration only the purpose of goods is been considered and not any other part. Now let us understand what are the various different types of warranty. Number one, the first type of warranty is the implied warranty, and the major second part is the extended warranty. In the consideration of first, that is an implied warranty, warranty as to merchantability of goods. At every stage, an individual or a purchaser or a seller has to understand that whatever goods and services he is either purchasing or delivering, those particular goods should be of a merchantable nature. The merchantable nature means it should be free from any encumbrance, and the particular goods should be available for day-to-day usage. So any goods which is available for trade, any goods which are available for the regular purpose of a certain individual or for the common man, such type of goods are being called as in goods of a merchantable quality. If the goods are being sold out into the open market, if the goods are being so either imported or either exported, then there is no condition as to the government norms and certain examples. So here in this case, we can say that it is always implied condition as to the warranty of merchantability of goods, and the goods are fit for consumption or fit for any condition which is being laid by the government. Warranty for a fitness for a particular purpose. So if the goods are fit are of a certain consideration that they are fit for a certain purpose, then accordingly there is always an implied warranty as to a particular purpose. So whatever goods, services we are either purchasing or selling, it is a type of an warranty that always the particular goods will be fit for a certain purpose, and that particular purpose has to be achieved or it has to be completed. Warranty as to title. It is always assumed that whatever title of goods and services is there with the seller, it is always clear and complete title, wherein if the title passes on from the seller to the buyer, then accordingly the clear title also passes from seller to the buyer, and hence initially the seller must have the cleared or the clean title, or that is a complete title, and then only the title can be transferred to the buyer in a complete sense or in a clear sense. So that is the implied warranty as to the warranty of title. The next or the last implied warranty is the warranty of habitability. The warranty of habitability concerns a certain situation wherein if the goods are being for a regular purpose or for regular consumption, then those particular goods should be usable for a particular person on the regular basis. So there is an implied warranty as to if there is a goods which is of an habitual nature or for a regular practice it has been required, then those particular goods are of a certain implied warranty as to the regular purpose, and it will serve as a part of an goods which is of a regular consumption or the day-to-day activity. So that are the conditions or the implied warranty which can be considered. The second perspective or the major type is the extended warranty. Number one, that is guaranteed ability to repair. So there is always a warranty associated, that is a condition that has been associated that if any repair or a certain amount of damage is considered to a certain product, then accordingly the repair and the for certain damages can be guaranteed, and it will be done by the company within the specified time period. So always a warranty is been followed with a certain amount of specific time period. Maybe that particular time period may be 1 month, 5 months, 6 months, 1 year, or maximum of 2 years. So in this particular case, a guaranteed ability to repair the product or a certain manufacturing defect can be get replaced is always considered in terms of an extended warranty. The more comprehensive coverage. So here in this case, always the product that we are purchasing, it is having a comprehensive or an overall coverage as to the purchase of goods, services, commodity, and so on. And hence, a comprehensive approach as to the type of warranty is essentially required to be identified in terms of a warranty contract. The peace of mind. Always, it is an extended concern that whatever product that we are offering or that has been delivered is always providing the peace of mind, that is the satisfaction level of the individual customer increases automatically. And hence, satisfaction of the consumer is essentially important, and the goods should be of a merchantable nature, wherein after consumption or after the usage of those goods and services, the customer must automatically get satisfied. Lastly, the concern of savings and the increased in the resale value. So in case of a savings concern, whatever goods and purchase services that the consumer is purchasing or consuming, at that particular stage, it is an extended warranty as to the amount that he is saving. So any efficiency, any want, any desire that the customer is looking for, that particular desire must save and it must get fulfilled. And if the particular desire does not get fulfilled, then we can say that the warranty as to the extended concern gets dissatisfied, and accordingly the product is not fit for a certain consumption. Now let's take another example in this particular session or the scenario. So when you buy a new car from a car dealer, the warranty states that the car is working, And after a stage, or that is after the usage of a particular car, and when you take the car at your home, you found that the car is not working. So here in this case, the car being in the particular warranty period, that is either a 1 month or a 6 months or a 1 year or a 2 year, what does the owner do or the dealer do? The dealer replaces a certain part of a certain product of that particular car, and accordingly the car again start to working. So the warranty gives the owner the right to have the dealer fix the car under the certain conditions, that is the length of time, the cause of damages, and so on. So these conditions are typically spelled out in the warranty contract. So when we purchase a certain product, we do observe that there are certain warranty conditions that have been mentioned. And those particular warranty conditions specifically states about what repair, what damages, and what changes in the product can be undertaken, and when the product can be replaced. So if there are manufacturing defect that is more than 60% or 80%, then only the product gets replaced and changed. But in case if the product, if the damages or defaults are of a minor nature, that is 10% or 20%, then only small repairs or damages are being undertaken and the warranty is into existence. Now let's understand what do we mean by a guarantee contract. So under section 126 of Sale of Goods Act of Indian Contract Act, the guarantee contract has been defined as a contract of guarantee is a contract to perform the promise or discharge the liability of the third person in case of his default. So here in this case, there are three parties who are available in a particular contract. That is the first party, that is the person who gives the guarantee, is called a surety. The person in whose respect the guarantee is been given is called the principal debtor, and the person to whom guarantee is been given is called a creditor. So a guarantee contract is a contract to perform the promise. So what is the promise? That the promise or discharge the liability of the third person, and when he considers a default. So unless and until the default is been considered by the third person, and who is the third person in this particular contract? The principal debtor. So always the guarantee contract is being conducted between the creditor and between the surety. So surety is a particular person who provides a certain guarantee that the principal debtor will pay a certain sum of money or will perform his promise respectively on a certain specified date or in a certain specific mode. So a guarantee contract can be considered only when the principal debtor does not perform. So if the principal debtor does not perform, then only the guarantee contract can come into existence and the rights and liabilities of a person can be executed. The guarantee contract is maybe either in a written format or it may be in a oral format. So both the consideration as to the written consideration or the oral consideration is accepted in terms of a guarantee contract. Now let's understand what are the various different types of guarantee. The different types of guarantee contracts are retrospective guarantee. So a retrospective guarantee is a type of guarantee contract which has been given for an existing debt or for an existing obligation. So if any amount or if any product or service or a particular transaction is due to be performed or a particular amount is yet to be paid, so in this particular consideration, the retrospective guarantee as to the existing, that is the current debt or the current obligation, can be given. And such type of guarantee which is given for the current existing debt or an obligation where the amount is yet to be paid or which is on a continuing basis, such type of contract is called as a retrospective guarantee. The prospective guarantee. In terms of a prospective guarantee, it is a type of contract which has been undertaken for at a certain future date. That is, you purchase a certain house as on today and you are not sure that whether you will be able to make the payment or not. So here in this case, what do? We go to a certain bank, and accordingly the banks give a prospective guarantee that if a particular person is not able to pay a certain sum of money, then in this particular case the bank will make the payment on the behalf of the purchaser. So for a certain future debt or for a future obligation, if the guarantee contract is being signed between the bank and between the builder, then here in this case the prospective guarantee contract is into existence. The next contract, the type of guarantee contract is the fidelity guarantee. In terms of an fidelity guarantee, the contract that has been undertaken for the good conduct or the behavior of a certain person. So this particular contract or a particular undertaking can be given by one person wherein he wants to say or he wants to sign an undertaking for the good conduct or the good behavior of a person in the future tense. So if in the current scenario, if the person has not performed in a better way, in a decent manner, then accordingly a guarantee contract of fidelity nature can be provided by X person, that is a third party, to say that in future the person will perform in a better way. So such type of guarantee contract is called as a fidelity guarantee. The fidelity guarantee can be submitted either to the registrar of the court, either to the judicial magistrates, either to the civil and the criminal courts, at the district courts, at the high courts, and at the appellate courts. So in this way, the fidelity guarantee contract is been submitted to different government authorities, that is the litigation matters. The specific guarantee. So a particular type of guarantee contract wherein all the terms and conditions have been specifically mentioned, and for a single debt, if a guarantee contract is been given, then such type of guarantee contract is called as a specific guarantee, wherein the terms, conditions, and all the forms of a particular contract are specifically being mentioned, and what is the amount of due, and what is the deadline, and what is the due date, and for what transaction, that is a single point of transaction if the guarantee contract is being undertaken. Such type of guarantee contract is called as a specific guarantee. The continuing guarantee. So under section 129 of the Sale of Goods Act, it specifically identifies or considers about what if the guarantee contract is been given for several number of transactions or several number of activities, then such type of guarantee contract is called as a continuing guarantee, wherein the guarantee contract continues until and unless all the transactions are not been performed. Now let us understand the further types of guarantees. That is the bid or the tender guarantee, the performance guarantee, the advance payment guarantee, the warranty guarantee, and the retention guarantee. So in case of a bid or a tender guarantee, it is been provided in an auction sale. So when a particular auction is being undertaken, and in that particular auction, if all the transactions or activities are being set or pre-decided, then any guarantee contract that has been given or a promise that has been given for the conduct of activity for the purchasing and selling of the auction, such type of contract is called as a bid or tender guarantee. The performance guarantee. Performance guarantee is of a consideration wherein the performance of the particular person, that is the behavior, either the conduct is being guaranteed, and accordingly the good conduct or the behavior undertaking is being provided by one person to the another person. Such type of guarantee contract is called as a performance guarantee. In case of a performance guarantee, the third party gives a certain assurance that the party on whom the guarantee contract is been signed, he will perform his promises respectively, and all the terms and conditions of the contract will be fulfilled. So such type of guarantee contract is called as a performance guarantee contract. The advance payment guarantee. So in case of an advance payment guarantee, the sum amount is already deposited with the particular person, that is the creditor. So if the creditor feels that a certain amount of surety is been required to be deposited as a part of an money or a certain currency, then here in this case, the advance payment is done by the surety. So when the surety makes an advance payment to the creditor, such type of guarantee contract is called as an advance payment guarantee contract. The warranty guarantee contract. So in case of a warranty guarantee contract, a third party can come into existence and they can give a certain guarantee as to the performance of a certain product. So here in this case, if it has been observed that the product is not performing as per the terms, conditions, and validity, then here in this case, the mediator or the person who is performing or who is giving the warranty can fulfill the guarantee contract, and accordingly the product may get replaced or it may get repaired. The retention guarantee. So the retention guarantee is a type of guarantee which has been given for the retention of a certain product or for a certain service. So in order to continue the relationship between a particular person, between two parties who are entering into this particular contract, the retention guarantee is been signed, and accordingly the contract is being undertaken between the three parties, maybe a surety, maybe a principal debtor, or maybe the creditor. So in this way, the retention guarantee can come into existence. Now let's take an example of the guarantee contract. So a guarantee contract is always defined as a promise that something will happen and someone has to perform a certain contract. So a paper declaring that a new barbecue grill would be fixed free of charge and the first 2 years following purchase is an example of a guarantee. So here in this case, if it has been observed that you have purchased a barbecue grill and in the first 2 years there will be no defect on this particular product, and if this particular product is not been performing as per the terms and conditions, then accordingly after the purchase, that is within the 2 years, the guarantee needs to be performed. And here in this case, guarantee is defined as a confident statement that something will occur, and if this particular statement will not occur, then accordingly the guarantee contract can be breached and the condition needs to be fulfilled, and accordingly the customer may get the product to be replaced and accordingly the contract gets repudiated. So that's an example of a guarantee contract. Now let's understand the 6 guarantees that have been given on goods. Number 1 is acceptable quality, wherein it is always accepted that whatever goods and services that we are purchasing, all those particular goods will be of a specific acceptable quality, that is as per the standards and norms that have been provided by the government. The second guarantee on goods is fit for a particular purpose. It has been always assumed that whatever goods and services that we are purchasing, they are always fit for consumption and fit for daily usage as to the merchantability. And hence, if the goods are being used for a particular purpose, such type of goods are available on the regular basis for the regular consumption, and they are fit for the specific purpose only. The matching the description. So if the goods is been purchased on the basis of sample that we have seen, so the maximum number of goods that we are purchasing, at least 95% or 99% of the goods must match according to the description. So if the goods we are being purchasing on the basis of a certain description or on the basis of sample, then the maximum quality or the quantity of goods must match according to the description. So again, it is a condition as a part of a guarantee contract. Match the sample or demonstration that has been modeled. So if you display, if a certain model is been displayed and you purchase the goods and services on the basis of certain model, then the maximum number of goods should match according to the sample or as per the demonstration. So this particular demonstration may be either in a written format or maybe in a oral format. So if you listen to a certain person and accordingly based on a certain demonstration you purchase a certain product, then it is always assumed as a part of a guarantee contract that as per the sample or as per the demonstration that was been given, the product should match accordingly. Express warranties will be honored. So accordingly, if a certain express warranty is been given, then it is always assumed that in terms of a guarantee contract, all the express warranties should be complied, they should be fulfilled, and accordingly those particular transactions needs to be complied. The spare parts and repair facilities will be available for a reasonable time after a purchase. So always a guarantee contract should have a specific amount of time that has been associated. This particular time may be related to either 6 months, 1 month, or maximum of 2 years. So every goods that we are purchasing, along with the warranty, condition, and guarantee contract, a specified time should be mentioned about what time of extension of duration will be available for the guarantee contract. Now let's understand what are the various rights of surety. So the rights of surety against the principal debtor. Against the principal debtor, the right of surety is to the right of subrogation, that is in terms of a certain payment. The another right against the principal debtor of the surety is to claim the indemnity, that is to recover the certain amount of money or to recover the amount of damages. The next third right of the surety against the principal debtor is to get relieved from the liability. So if the principal debtor makes a certain amount of payment, then automatically the surety has the right to get relieved from his liability. Now let's understand what are the various rights of surety against the creditor. Number one, that is benefiting the security. Always the surety has to provide a security to the creditor that if the principal debtor does not make the payment, then the surety will definitely make the payment on his behalf. Claim settlement of. So if the principal debtor makes a certain amount of payment, either a part payment or a full payment, then accordingly the surety has a right to get the settlement of a particular claim and accordingly set off his liability also and set off the liability of the creditor also. Exoneration. So a certain amount of right that can be availed by a certain creditor as to which can be occur on only a specific due date. So if unless and until the due date does not occur, the liability of a creditor or either liability of a surety does not exist. And the rights against the co-surety. So if there are more number of sureties that have been involved, then accordingly the right of co-sureties is also been associated with the principal security. So now let's take another example with respect to the guarantee contract. So in respect to a guarantee contract, a service guarantee is a commitment made by a corporation to perform a specified standard. And if the customer satisfactions are not been fulfilled, then accordingly the corporation offers them a certain compensation in a certain form. In this case, you have a certain option or a HTD with respect to the Radisson Hotels. Radisson Hotels Worldwide, for example, provides the following guarantee. At Radisson, we strive for complete guest pleasure. So in this case, the guarantee contract arises or considers of a situation wherein the maximum number of guest pleasure will be provided and accordingly the guests will be very happy in consideration of a certain amount of guarantee. So in this case, a guarantee contract is into existence. So in order to summarize, now let's understand that a guarantee contract is essentially to be performed as per the terms and conditions that have been mentioned in a certain contract. Whereas a warranty is always a stipulation which is collateral, that is which is of a primary or a secondary importance as per the terms and conditions of the validity of a certain contract. So a guarantee encompasses the product, services, people and the customer satisfaction, whereas the warranty only encompasses the goods, and accordingly on the basis of goods only the guarantee contract or the warranty contract can come into existence. And the warranty is provided without any charge. So if the particular charge has been found, then it may incur, or if the charge is not found, then it may not incur, and hence the guarantee or warranty contract can come into existence. Now let's summarize what we have learned in this particular session. In this particular session, we have understood what do we mean by a warranty contract and what do we mean by a guarantee. Next thing, we have understood which type of warranty and which type of guarantee is being required in certain goods and services. And lastly, how do we implement the warranty and guarantee and what are the various compliances as to legal formalities of a warranty and guarantees. And lastly, we have also seen various types of warranty and guarantee contracts and what are the various examples that have been associated with respect to the warranty and guarantee. I hope you must have enjoyed the learning at this particular session. Thank you so much for your patience listening. Thank you.